Okay, folks, so as we approach another beautiful week in the stock market, we need to discuss violently what to prepare for, as well as the top 3 stocks for this week. And let me be clear, I don't condone violence unless it's in the form of stock market violence, in which case I very, very much do condone it. And before we get into all of this, the only thing that I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, let's go ahead and start with the crypto market. So the crypto market's momentum has taken a small breath after the intense rallies as of late. We once again are in the best attempt yet to new levels. JP Morgan just came out saying that Bitcoin, not gold, is the latest new inflation hedge, citing institutional investors appearing to return to Bitcoin after sell-offs earlier this year, and comparing performance. For example, Bitcoin is up 85% this year, Ethereum is up 393%, whereas gold, an asset class that many people see as a safe haven and many people suggested buying ahead of 2021's expected inflation boom, well, that's actually down 6.5% on the year. And they also suggest that, hey, wait a second, we're in this period where inflation scares are getting higher and higher and higher. More and more people are worried about inflation, yet gold isn't quite trading as a hedge against inflation right now, whereas, of course, the crypto market has taken off. Okay, moving on, we are now in the early days of earnings season, with banks starting to report this week. JP Morgan, Wells Fargo, B of A, US Bancorp, Morgan Stanley, and the Sachs over at Goldman. Tech companies and most other major companies that we watch will be reporting in the next couple of weeks to month as well. Usually after that, followed by most of the small caps. It's also worth mentioning that heading into this week, we're heading into a market that just got hit with the really, really bad news of that dramatically disappointing jobs report, which reinvigorates the economic slowdown worries, highlights the massive labor shortage issue that we have, but on the other hand, does have a little bit of a downward pressure effect on inflation, at least until businesses are forced to pay a higher wage in order to get workers back. Okay, in terms of other major catalysts heading into this week, BBIG will be having their shareholder meeting on October 14th, and their much anticipated Cryptide spinoff date, which was long planned to happen on October 15th, has been pushed back a bit to October 22nd, which is next Friday. And of course, when it comes down to most catalysts, the idea is that you look for pre-anticipatory runs and post-reaction runs, but you don't want to hold through said catalyst. Also keep in mind that I'm very well aware that whenever a catalyst comes out for a heavily shorted stock, a lot of people spread rumors on social media that for some reason shorts have to cover because of a catalyst. If that was true, they would have tried to cover a long time ago, because we all knew that this Cryptide spinoff was going to happen. Shorts are only forced to cover in most cases when you have a huge margin call situation and they can't cover the minimum margin requirements, the minimum maintenance requirements. But in terms of major catalysts raise the risk profile of shorts quite a bit because they raise the chance of, well, a catalyst run. When a catalyst goes and induces buying pressure, that buying pressure creates a worse risk profile for the short positions that are open on the stock. If it gets bad enough, some of the weaker shorts will have to cover, which will cause it to go up even faster, which then creates a huge liability for shorts that are still holding this type of stock. Okay, next, SDC. Over the last week, we've been talking about how this lower level of resistance is paramount to setting the next stage, and that has so far been true, with SDC continuously attempting but unfortunately failing to hold above it. My thought process, well, I want to see SDC break and hold above that lower resistance level, like we saw it do before. With the high short interest on this, it needs to show some proof of concept that, hey, this is still a momentum player. Otherwise, it's just a stock that keeps failing to break out into new highs. Its attempts at passing that first level of resistance are promising so far, but it's not enough. It needs to break above that and hold it, and then we want to see it break out into that higher resistance level. When you don't require a lot from your setups, you don't get a lot in return. Okay, next, Voyager. So we have a part of ZipTrader U called Charlie Q's, which comes out every morning with the morning briefings. This is a new thing that we do, and essentially when people tag me in questions in the ZipTrader U Discord, we'll go and answer them every morning. And on Thursday morning, one of the questions was on the Voyager license deal with Pfizer, which was potentially valued at $600 million. My thought process at the time is, hey, this definitely has the potential to be a multi-runner catalyst play. With the level of impact that this has on the company's future bottom line, this definitely could spill over with more price strength. And then the following day, which was Friday, we had a 40% run on this stock, which leaves us with the question, is there more room to run here, or is it over? Keep in mind, you have 3 things going for the stock. Number 1, you have a potential bolster of revenue. Number 2, you have a very strong dynamic where you have a small no-name company partnering with a major company. That lends not just reliable new inflows of revenue, but also a huge reputation boost. Let's start with revenue for a second. So generally speaking, traders anticipate companies trading at a multiple of sales. Voyager, even after its rally, it's sitting at $210 million in market cap. If this contract actually ends up hitting the highest potential here, which is around 600 million. That's a lot of money flowing to the company's revenue. But the other part, which a lot of people forget, is the actual reputation add. Partnering with a company like Pfizer brings a huge trust factor, which is essential and almost impossible to get elsewhere. There's no shortage of ambitious, starry-eyed, up-and-coming biotech companies that would kill to have a reputation boost. This partnership gives that reputation boost to Voyager. Once they get the trust factor, it's much, much easier for companies to bring in investment capital, raise debt at more favorable rates, even attract more talent. And most importantly, if Pfizer's partnering with them, other big biotech companies are going to be like, hey, they have something good to offer. Yes, right now it's being pumped by catalyst hype buyers that are trying to get in, scalp a profit, and get out, at which case the price is going to dump as investors cool off from this news. But bigger picture, this is a stock that has been hemorrhaging shareholder price since July 2019. With this catalyst, it represents the first trend change opportunity, both for the stock and the company itself. Okay, SoFi. So a few weeks back, I made my bullish case for SoFi. We talked about their scaling member growth, the growth they've had in key parts of their business, as well as extreme diversification in their suite of products, and how my own bullishness is pegged very closely to their extreme and exponential success in growing their financial services sector. And I do want to remind you, while coverage isn't super hot for SoFi, we are going to see a huge picking up of coverage towards the end of this month, and especially during the beginning of next month. On November 11th, they'll have their earnings, where we're going to see the next iteration of results reported to see if they are continuing on their current growth trajectory. It's also true that 2022 has a lot of favorable tailwinds for SoFi. Number one, an entire sector of the company's business model is coming back because of the expiration of student loan interest restrictions. And then, of course, the main bigger deal is SoFi getting their bank charter catalyst via acquisition approval. But the other thing that we need to discuss is SoFi's recent large convertible debt offering. Valued at $1.1 billion, it didn't exactly go over well with shareholders. But here's the thing, the press release indicates that the notes will be sold in a private offering only to persons reasonably believed to be qualified institutional buyers, which of course is standard, but I'm just trying to set up the main point here. The notes, aka loaned money, given will be unsecured, unsubordinated obligations. Notes will not bear regular interest, and the principal amount for notes will not accrete, aka grow. So here we have institutional investors. They are taking the risk in loaning money and receiving non-interest bearing notes in return. Basically just handing money and saying, oh, you're fine, don't pay us any interest, pay us back at the end. And you may be thinking, what? I thought the main goal of loaning money is to make money on said loan money. Well, backing up, of course, there's indeed two different ways to make money on a loan via a convertible debt offering. Number one is that interest rate. How much money is that debt paying you out in interest? And in this case, that's set at 0. So with interest rates on the note being set to 0, the profit needs to be made in the conversion stage. And what are the conversions set at? Well, $22.41 per share, which is roughly 40% higher than the current trading price. So here's what that means. Bankers are so damn confident in SoFi that SoFi was able to strong arm its way to getting 0% on this note. Secondly, now SoFi has a ton more capital at which to add shareholder value before the note comes due, which it may use for strategic acquisitions, it may use to build out the extra features that it will have after it receives its bank charter, which hopefully will happen within the next 12 months, and will allow it to grow out even further its suite of products to its ever-increasing member line. I am very, very excited about SoFi, and I know a lot of people are putting some FUD on this debt offering, but hey, at the end of the day, companies need debt to accelerate their gains. If they can return higher gains than the rate of interest and the negative impact of conversion, then I would argue it's not a negative factor, it's a positive factor. I think it shows not just that SoFi has huge confidence in its future, but also the bankers that are giving money to SoFi. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade with our step-by-step lessons, our private chat, and of course our daily morning briefings, where we brief on what's happening in the market each and every morning, as well as my favorite catalysts and what my thought process is on them, I'll go ahead and put a link to ZipTrader you below. Make sure to watch the video on the website. I'll walk you through everything you need to know about the course so you can decide whether or not it's a good fit for you. FUD Stopper 50 will get you $50 off before checkout. If you're wondering what broker to trade these stocks on, well, we like to send new traders over to public.com/ZipTrader. They're a fantastic broker, and you will get one free stock when you sign up and deposit just $1 using our link below. Anyways, folks, that caps off the video, and I'll see you in the next one.